Hi, I'm Marcel with Guaranteed Rate, and I want to talk to you about closing costs. Closing costs are something that sometimes people become very concerned about because they are looking at the overall amount of money that they're having to bring to a closing, and typically it's going to end up being the down payment plus any other closing costs. And those might be lender fees, title company fees, third-party fees such as appraisal, survey, and the like. So what you need to know about closing costs is that in essence, those closing costs generally can be paid by a variety of different sources. Number one, the lender can actually give you a credit to pay those closing costs, not just on the lender side, but also on some of the third-party side or paying for some upfront prepaid items. For example, a year of the homeowner's insurance upfront or prepaying your escrow account for you. So I wanted to explain exactly how that works. So what ends up happening whenever you're shopping for a mortgage, you in essence are going to be looking at interest rates. Interest rates are going to be really done on adjustments with either additional cost associated to them, meaning that you can choose to pay additional points in order to have a below market interest rate if this is a property that you plan on keeping for a long time. Or you can do the opposite, which is much more common. Let's say, for example, and let's just throw out some loose numbers. Let's say that the market right now is in the mid 3%. And so that's where interest rates are, roughly the mid 3%. Well, if you're willing to take a little bit higher than market interest rate, the lender can then, instead of receiving points to pay down the interest rate, can actually give you points in order to offset some closing costs. So there's this diminishing law of return, which means that if you take a slightly higher interest rate, the lender might be able to pay you half a point, a full point. If you go up, the lender might be able to now pay you an additional 1/8%. So it's really important to work with the lender and see exactly what the closing costs are, how much you need covered, and then do a comparison. Okay, this is what the loan would look like if I'm not having the lender pay any costs, and this is what the loan would look like if I am having the lender pay some of those closing costs. So the lender can certainly pay some closing costs. You can also negotiate in the transaction to ask the seller to pay some closing costs. Now this is going to vary from program to program. Every program has its limitations on how much the seller can pay, but generally in the homes that are here in our area, the seller should be able to pay most of, if not all of, the closing costs. So the way that this works, let's say that you're going to make an offer on a property of $300,000. You want the seller to net $300,000. You can either come in with an offer right at $300,000, or let's say you want the seller to cover $3,000 of your closing costs. You can make an offer of $303,000 and then ask the seller to actually pay $3,000 of your closing costs, which will have you netting, or have the seller netting, $300,000. So in essence, that way some of your closing costs are paid and the seller is netting what you're wanting the actual offer to be. So in any case, if you have questions on closing costs, how to structure mortgages, please let me know. I'm happy to go through all of those details with you. Marcel with Guaranteed Rate, 972-672-3246, and I'll talk to you soon. Thanks. Bye.